My topic, as far as buyers or sellers, is just pretty much knowing like whose market it is. So technically, you or me, we don't move the market individually. It takes like the banks to move the market. And when I say the banks, I mean like the big banks from each individual country or whatever. We all have like the big players who's actually moving the market. So in order to know like whose market you're in, you're either the market is either going to be in an uptrend, a downtrend, or it's going to consolidate or be in a range, which is going sideways. So part of our job as a trader is to know what the market is doing and who's in control of it. So the first thing we want to do to figure out who's in control of the market, it doesn't really matter what chart you're on or what your tickler is. You want to change it to like a higher time frame, which would be like a daily chart or 4 hour or even a 1 hour, but the weekly may be a little bit too much. So whenever you switch to your higher time frame, you want to figure out what your most recent low and your most recent high is. So in this case, or not your most recent, but your lowest low is here, and your most recent high would be here. So we're on a daily chart. We would consider this a buyer's market. So if we draw a trend line tool here, we'll be able to see that the market was going up. I mean, technically, if we got in today right here, this is kind of in the sell zone, but the overall right here was a buy. So see, I have all these trend lines on here, but since we're on the daily and we normally trade from the 15, you want to stick with whatever's happening like the most recent. So we wouldn't we would look right here because this is when we're coming to the market. So right now the market is in a sell. So flip down to the lower time frame. The market is in the sell zone. It's going down. You want to mark your low and your high, of course, on the higher time frame. And I would say this is sufficient right here as far as the low, because the market is currently moving at this price right here. And this would be the next low that was respected by your support line right here. So possibly the market could be moving down to that point. So when you switch down to a lower time frame, I hope I'm not losing people because I did kind of just jump right in, but I know that the live kind of started late and I don't know how much time you guys have, but I just kind of wanted to jump right in. So switching down to the lower time frame, we're keeping in mind that we are in a seller's market. So when you're in a seller's market, you want to sell, but you don't want to sell while the sellers are selling. That's like technically being late to the game. So the sellers sell to sellers and the buyers sell to buyers. I mean, I'm sorry. In order to sell, you must have buyers. And in order to buy, you must have sellers. So the sellers are selling to the buyers and the buyers are selling to the sellers. You guys get it. It's regular, everyday transaction, retail stuff. So if the market is currently going down, you're looking to eventually get in a sale because the overall trend is a downtrend on your higher time frame. But when you switch to your lower time frame, you only want to sell to buyers. So you're looking for an uptrend per se. So in this recent example, so if you were to come to the market and let's say everything to the left of here, you're not really looking at because you come in and you just see this right here and it's pretty much an uptrend. Now you have already analyzed your chart and you've already looked on a daily, so you already know that the overall movement is down. So that uptrend is giving you your opportunity to sell to your buyers. Now, one thing about retail traders versus the big banks is that retail traders are always late to the game. So whereas a retail trader may come in and they may see that this market right here, can you guys see I'm gonna draw on a chart because I don't know if you can see this, but the retail trader may come in and see this movement go down right here from our downtrend, and they're like, okay, they don't really think it's a downtrend yet because of this big uptrend movement. So then they come and this happens. Now, retail traders are thinking, oh my gosh, this is the downtrend. So they start to sell right in this area. And as soon as they push that sell button, what happens? The market starts to turn around right there because retail traders are late to the game. Now, this is what we call pretty much like a money spot for traders who have already like did the analyzing. We know that this is a downtrend. You have the retail traders who hadn't really analyzed the market. They're just reacting to what they see at that moment. So the market was going up. They're like, okay, it's an uptrend. But by the time they realize the uptrend is already returning, turning around. So right here, they're seeing this. This is a bunch of noise. Like the whole thing, if they were to just come to the market and just look right here on the 15-minute time frame, they would not understand that the market is actually trending down. So by the time the retail traders decide, hey, I want to get in for a sale here, the market starts to go turn around and it starts to make where's my drawing tool? It starts to make it has a bottom here. You get a lot of people wanting to sell there, so the market wants to turn around and go up. So now the people who were selling down here are getting discouraged because they haven't trained their mindset to really, like, you know, I don't know, there may be, because as new traders, they're watching the charts like every 2 seconds. They push buy or sell, and then they sit there and they watch it and they watch it, and that drives them crazy. So as soon as the market begins to turn around, they close the trade because it's not going in their direction. Now they're in the negative. Now they have downfall. So now the market comes back right here. So they're like, oh man, you know, it's going to go down again, you know. So they're back in the trade because they're still looking at this big candle right here. So they get back in the trade. And market does it again, turn back around. So us knowing that we want to sell to the buyers, we're looking like, okay, this new buy has now broke the most recent high of the last buy. So now who's interested in the market? The retail traders. So now we have buyers in the market. So the retail traders get in, but of course they get in after the second retrace up here, and now they're buying right here. So they're buying, and of course us as we're ultimately sellers. We're waiting on a good price. We get a lot of people buying up in here. We decide we want to sell it right here. The market, of course, pushes right back down because the big players have the money and they have the power to move the market. So whenever they decide to put in a big buy, the market's definitely coming back down. But it don't break the last low. So that's what we're looking for, because we're looking for the trend to continue down on a higher time frame. So we noticed that it doesn't break that yet, you know. So us as traders, our job is to be patient. We want to be patient, and we want to get the best price for what it is that we're buying or selling. So the market goes back up, doesn't break the last high. The last high does not get broken. We're looking to sell this. We see that this part it made a resistance zone right here. We're patient because, of course, the trend is not ready to continue. It didn't even hit our lowest low. So we wait until it get back to this area because we see that that area is the best price to go ahead and sell and to continue the trend. We don't want to sell and continue the trend after the trend has already broken this area right here, due to the fact that because that creates us as a late trader and we don't make as much money down here as we would if we were to get a better price. So once we've already recognized that this is our area for our money spot, we want to get in at the best price, which would be, we're looking at our most recent, now the screen is off. Let me just erase everything again. But we're looking at our, what the market tried to do as our most recent high, which is still this area right here. So we know that we had some resistance previously, and we're gonna see if that resistance breaks and makes a higher high, because that's how you know whether the trend is going in an uptrend or a downtrend, because an uptrend has higher highs and higher lows. So higher highs, this would be a low, high, a higher high, I mean a higher low, I'm sorry. Then you have a higher high, then you have a higher low, and that's how you know that you're in an uptrend. And it's the opposite for a downtrend. You have a high, it goes down, you have a higher, a lower high, then it makes a lower low, it makes a lower high. So that creates a downtrend. I don't have my mouse, so the drawing on here is kind of whack. But okay, so now that I have identified what direction you're ultimately looking to get in the market at. So on a bigger time frame, you see that the market is going down. You want to get in on a downtrend because it's a seller's market. In order to sell, you have to have buyers. So of course, you wait for the buyers to come in. Of course, you do that on your smaller time frame because your buyers, of course, are going to be your retail traders. The average retail traders, I should say that, because I'm not a big bank and I am technically a retail trader as well, but I have to think like the big banks if I want to make money in this market. So the market pulled back here, and then it went down, and then it come back up, and it hit right here where your last resistance is, but it doesn't break it. What does that tell you? That's a double top. So you see that when people talk about double tops, double bottoms, M's, W's, that's how a double top is created. The first test resistance zone was not broken, and so it hit it again and came back down and created a double top. You also had a triple top theory as well, so this would maybe be a triple top. So as a retail trade, as a future professional trader, you're looking to get in this area up here. So when the market does decide it wants to go down, you've called that move and made that money. Now, typically, if the market has not collected enough contracts to continue the downtrend past your most recent low, which is down here, so if it has not collected enough contracts, then it's technically going to bounce back and forth in this area until it has. So it has to have people in the market in order to get the money. But so it's going to entice people to continually get in. But if you don't know like whose market it is, you're going to keep, people are going to be buying up here and selling down here, buying up here and selling down there, and they're constantly going to be losing money. But you, as a trader who know better, is going to be just pretty much looking for sales here. If you take a buy, you already know that it's going to be a short term and you have your resistance part marked. The best thing for you to do is take your buy at the support level, because you don't want to be in it for a long time and you just want to get a few quick pips and get out of there, because ultimately you know that you're selling this market. So then once price starts to give you the indication about to sell, it'll come back down. Now, if you run into the situation where the trend is not continuing any farther on the bigger time frame, that this also helps you to get in up at the retracement level, because you would have at least took the trade back down to the support level, and you can either do like a trailing stop or a stop loss or something like that. That way, if it decides to reverse, you made some money, and most likely you should be in profit, because of course we at Atlas, we kind of teach our traders to move your stop loss into profit after your trade goes into profit. So there's more trainings about that in the back office area. Okay, so is everybody understanding what I'm trying to explain here, as far as knowing whether the market is a buyer's market or a seller's market, and understanding the difference between retail traders and the big banks, and why retail traders are, why sometimes the trade turns around when you get in, and things like that. Please leave comments in the chat box. I will be reviewing them. If you have any questions, leave them in the chat box. I'm going to try to slow down a little bit, because sometimes I do get excited, and I know that some people are watching who's never traded before at all. They don't even know what these things are, and I apologize to those people. I was actually planning on making this a little more beginner friendly, but I got excited, and I hope you guys continue to follow, because I'll hopefully be able to connect the dots with everything eventually. But definitely, if you have any questions, type them in the chat box. Type them in the chat box and let me know. That way I can address those. Okay, so okay, so have you ever heard of the term that once you hear about an opportunity, it's too late? That's a good term for the Forex market. Like, my theory is, when you see the market going down like this, you don't want to get in while the market is going down with the market, because that's called chasing the market. And a lot of retail traders lose money big time that way when they chase the market. Yes, you want to go with the trend, and yes, the trend is your friend, but you don't find the trend on the smaller time frame. You find it on the bigger time frame. As a trader, you definitely want to have patience. You want to have patience, because it can be discouraging to get into a trade, and then the trade turn the opposite direction, but you've checked the bigger time frame, and you know that this is the direction that the trend is going. So you're like, this is, I'm really confident, and then once you get at the trade actually go your way. Like, I know everybody's been there before, and that would drive you crazy. So like, learning patience and really trusting yourself, trusting your analysis, marking your chart from top down, like top down analysis or whatever, it always helps. When I say top down analysis, of course, let me jump back to the beginning, jump into the bigger time frame, using your trend lines to mark your lows and your highs, your most exactly where price is. You want to mark where the highest point of price was and where price could possibly be going to. On the bigger time frame, like the hourly chart, you really don't want too many lines on there, because you don't want it to be too clouded. So I think 2 lines for support, one for support and one for resistance, is okay. Once you get down to the lower time frames, that's when you have a lot more trend line, support and resistance zones and everything, and you may want to draw trend lines and stuff like that. But
we got 2 questions. One is, what session do you personally trade in the most? And when you find the trend on the bigger time frames, how do you identify your entry on the lower time frame?
Okay. So personally, I trade. I like to trade New York. I trade London. That's the one that I trade the most. That's like the session. But of course, I live in Illinois, so London session here is like 1 a.m. You know, I don't always make it to that, so I will get up and trade the New York session, and that'll help as well. And the only reason for that is because I trade like GBP pairs and stuff, and those move during those sessions. So if I did decide to trade like AJ, that will probably be during a Asian session. So that's another thing to keep in mind. If you whatever pairs you're trading, make sure that it's moving during that session. If you yeah, whatever pairs you're trading, make sure that it moves during that session. US pairs and similar pairs to the US move during the US session. Then you have the Asian session and the London session. So keep that in mind. And that'll keep you from being in your trade for a long time. So you don't, sitting in your trade for hours, unless of course you're a long-term trader and you want to get in your trade and you want to just hold it for a few days and things like that. This method would definitely assist you with that. But if you're like more of a scalper, then you want to kind of get in when on the pair, in the trading zone that pair actually moves. And a good way to find out is to like go through your charts and backtest and see when those moves actually happen. Like as far as moving in a trend versus ranging from side to side, consolidating. The other question was, once you identify the trend on the daily chart, how do you get in on the 15-minute chart? Okay, so here, let's say we identified this is a downtrend on a daily chart, and even just looking at the bigger picture here on the daily chart. Hold on, let me flip to. Let me see what some of these other pairs are doing. Oh, perfect. All right. So here's one right here. This one clearly is in an uptrend on the daily chart. Like that's just very clear here. So we want to switch back down to our lower time frame. And so here we've noticed that it was in a daily chart. And so, I'm sorry, it's in an uptrend on your daily chart. You have your low here. Where's my tool? Because you guys can't see my little cross thing, so I have to draw on my chart. But your low is there. Then you have, so it depends on how you look at it, because this could be a really long one like this, like, you could look at it like that. But in each trend, there's little bitty trends inside of each trend. So that actually comes with market structure, which is what I originally thought I was going to do tonight. But I figured just simple buyer and sellers should be okay for now. Oops. So, all right, so this is identified as an uptrend. When it was in this area right here, this was the most recent high. And then it broke that high right here. So this person right here, this little candle is responsible for this uptrend. So once it broke that high and then it made a lower low here, it became an uptrend. So now you want to get in going up, of course, but you want to figure out where to get in at. You want to switch down to the lower time frame. You're looking for sellers. You're looking for sellers on the lower time frame in order to continue the trend going up. All right, so I have switched to my hour chart, which, well, from the daily, let me go down to the 4 hours. But if you were trading from the 4 hour, then you can jump down to the hour or the 15-minute or something like that. So if you're doing more of a longer trade, like you're staying in your trade for a few days, you want to definitely do the daily. But sometimes you can figure out what trend the 4-hour chart is in and then go down from there. So we're still looking at an up in the 4-hour. And the 1 hour looks like it's starting to have sellers come in. So we're in an uptrend. We saw that from our bigger picture. This little move right here looked like it's starting to have sellers come in. But also there was this move right here as well. And if you think about my previous example, okay, so the market is going up. I'm on the hour chart. I'm looking to get in going up because that was when, I mean, that's the direction that the market is going in. So maybe I missed the actual entry, which would have probably been in this area right here, because during this uptrend, this is where the market starts to go down. So this is where you're looking for your sellers at. I mean, this is where you're looking to buy from your sellers at, right here. It starts to turn around right here and it breaks. Is at the lowest entry right here, the lowest point that it was at from the last uptrend. It goes back up and tests pretty much the little trend line, and then it breaks that low, this low right here. So once it breaks this last low, of course, the retail traders or the traders who haven't had much experience, they're on the 15 or we're on the hour chart. They're on the hour chart and they're like, okay, it broke this low right here, so now it must be a downtrend. So this is the area where they start to get in to sell. And you knowing that it's an uptrend, you're getting in to buy at this area, but you don't want to buy at the first sign of you want to wait till it have 2 rejections on the support level. So I guess that's a more clear answer to your question. Long story short, you want to make sure it has 2 rejections. So here the sellers are coming in right here. You know, so the market is really in an uptrend, so it reverses and it goes up. Those people are either stopped out or they got out of their trade because they're like, okay, you know, I thought it was a sale and ended up coming technically right back up to where the last resistance zone is, but it don't break that zone. So people are like, okay, I think it's still a sale. This low zone right here, which was the lowest, which was the last low that it broke. So it comes up to that and it don't break it. Price comes right back down because everybody's getting in on a sale. It's not breaking this last resistance low. It must be a sale, 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 sale. Everybody's like sale. You know better. You're looking for your buy. Price comes back right down to this area where it rejected from the last time. That is your signal to buy. So like, and that's just in a simple way for because we're on a hour chart. So most people do enter on a 15-minute chart or whatever. But you want to analyze it, the market just like that. You want to go from the top down. You want to go from the daily to the 4-hour to the hourly and know where you are in the market at all times. You want to be biased. And this is actually naked trading. This isn't any indicators. This isn't any EMAs or anything like that. This is just really, I want to call it logic, but I don't know if that's a good word for it. But this is naked trading, you know. So now that you're on your 15-minute chart, you've already marked your buy zone, which zone you know it has already rejected in. Well, you already know where your rejection area was at. So that is your buy zone. And you want to look for buys in that area if that answers your question. So even when you flip down to your 15-minute chart, you see that it's rejected. So here was your most previous rejection area was here on the bigger time frame. See, I need my mouse because this touchpad is like Hurricane. So this was your most recent rejection on a bigger time frame. Price came back to hit your mark. You mark that spot and you wait. Patience pays. Patience pays. You mark your spot and you wait. Price comes back down to this area right here. Makes another rejection because you see it starts to go up right here. Like you start to see your buy candles. And technically I would probably get in around that spot because that would be my retest zone from here. So you have two zones, and sometimes it makes three, like the double bottom, triple bottom. So sometimes it makes three. And to me, I think when it does make three, that makes for an even stronger push. So you want to, of course, have proper risk management. You want to set your, I'm sorry, I'm reading the comments. But you want to have proper risk management. You want to set your take profit and your stop loss to because if this isn't the gonna be the low for your buy, you want to get out as soon as possible, because you don't want to be in the market with a buy and it's just selling. So as soon as you realize that that's not a good opportunity for you to get in, you want to get out as soon as possible and mark up your entry and try it again, or like do your analysis over and place your order at a better zone. So as you can see, you would have been able to catch that buy. But it looks like, so I'm actually looking at this as far as may possibly being a trade for me in the near future. Just, based off of, just the buyer and the seller zone. So just looking at the top down analysis, I may have missed the entry. So if it come back down, I will definitely possibly be looking to buy in this area as a triple bottom. I didn't get in this trade, of course, because I wasn't looking at it. But that's just, and if you decide to take that trade, just understand that would have been your choice. So don't come yelling at me and saying, hey, you told me to trade that, because I didn't tell anybody to trade anything. Any other questions I can answer for you guys as far as what we went over tonight? And hopefully I answered the questions that was already asked as well.
Yeah, we got one. I'm not sure if you answered. I think you kind of answered it, but maybe a little bit more clarification. Danella asked, what if your trends on a 4 hour and 1 hour are different? Which would you follow?
I would go to the bigger time frame, which would be the daily, and I would always follow the bigger time frame. So like if you get in, if the daily is going in a buy, and then your 4 hour is going in a sell. But if you're a scalper, you want to follow your 4 hour, because it may be a long time before that buy start again. So that's another thing you have to think about, is what type of trader are you? Are you trading as a long-term trader? Are you trading as a scalper, or like, what type of trader are you?
Right.
Technically. Did that answer? No?
Yes, she said thank you.
Okay. Any other questions?
So I just allow people to unmute themselves if you guys want to ask questions.
Because I know I said a lot and I said it fast, so.
This was great. A lot of people in the chats are saying that this really helped and clear some things that they were confused on. So this was a great training. Okay,
cool. I wanted to try to keep it simple. How do I get back to the stop share?
But yeah, guys, you can unmute yourself, or you can drop questions in the chat if you have any.
Yeah. Oh my gosh, I didn't see none of these comments on the Discord. I mean, on the Zoom. I was looking at the Facebook. But
yeah, I got most. I think I got most of the questions to you. I don't think I missed any.
Yeah. Okay. Cool. Cool. Cool.
That's about the
It really
pairs.
didn't
I
matter
didn't know
what.
what the pairs was. I was thrown off by that. What is that? What do you mean by pairs?
Okay. Let me go back to that. So whenever you decide to buy or sell, the pairs are going to be like the name of it's going to be 3 letters that represent the country. So right here it says
You're not sharing your screen.
Yeah, I
no.
can't see a screen, but I can visualize. Someone comment said something about it was in the upper left hand
Oh
corner.
yeah, I thought you meant when I answered that. I thought you were just asking what the pair was, not what
Is a pair.
Yeah, right.
Yeah. Okay. So which were you asking like what is a pair?
Yes, because you gotta remember I'm beginner.
Right.
Like
Okay.
I have completely no knowledge of it other
Okay.
than, but I followed you quite well. Like
Who's actually speaking right now?
This is Natasha.
Hey, girl.
Hey.
Okay,
I've been wanting to learn this for the longest, so it's interesting. And like again, I'm starting from the bottom. So when you
I get you. I'm gonna have a live training in person, so I'll let you know more about that soon too.
Yes, ma'am.
Let me show you what pairs are. So right here in this I don't know if you can see it.
I can see it now.
Area.
Yeah.
Okay, so it's a Euro JPY. Technically, you have the 3 letters to the left stands for like the Europe, like Euro, and then the JPY is like Japanese, so like the Japanese yen, or in the euro, pound, the US dollar. So that's what USD would stand for, like United States dollar. The JPY stands for Japanese yen, things like that. So you're trading those 2 pairs against each other. So like if you go to USD JPY, you're trading the US dollar against the Japanese yen. So if you decide to buy USD JPY, you're buying whatever it is that's on the left side of the pair. So you're buying the United States dollar. You're hoping that the United States dollar goes up. If you decide to sell USD JPY, then you will make money once the United States dollar goes down. You understand that?
Yeah.
Okay. So in Forex, you do make money going both ways, buys and sells. So that's a little bit different from stocks. When you buy a stock, I guess they have calls and puts now. But back when I first started trading stocks, if you bought a stock for, I don't know, $50 and the value of that stock went down to $40, technically you lost $10. But you technically don't lose it until you close it. But if the value just went down to 40 and never came back up, you lost $10. So in the Forex market, we actually have the option to make money both ways. So we can either buy the currency or we can sell the currency. And like we don't have to own it to sell it. That was one of the things that I thought as a newbie, like how I'm gonna sell something I don't own. It's just you're placing a bet on whether the currency is gonna rise or fall. So it's called buy or sell.
Okay.
Yeah, good question.
So it's safe to say that starting with just pennies is a safe route.
The safest route is actually to demo trade on a paper money, so it's not your real money. You can open that up with any broker, a paper trading account. I personally would advise that you start it off with like a realistic amount of money, because they do let you start off your demo accounts with like $1 million and stuff. So if you're not really planning on starting trading with $1 million, then I would probably go something more realistic. They do have accounts where you can start off as little as $10, but those are like micro accounts. So technically, as far as profit, you're not gonna make much profit if you're looking to like quit your job on a micro account. But you can practice the skill on that account, because all in all, it's still your money. So you're still learning the skill, and that's my biggest thing for a beginner. You want to focus on the skill, not the money. The skill will bring the money, but the skill is
Okay.
Awesome.
Any other questions? How do you know when, do anybody know when a buyer's market has changed to a seller's market? Yes, no?
Give some time for people to put it in the chat or answer. They might be too nervous to answer. Alexa says no.
Okay. So one of the ways, well, one of the ways to know whether your buyer's market has turned into a seller's market or seller's market has turned into a buyer's market. Hey, Lexi. You want to, well, it's technically when your high that you've marked on your daily or whatever, or in your low has broken. So on this example, it would be like, let's say that was your high, this is your low. The market is going down, so it goes down, it breaks it, so it made a lower low, but it did. Now this is one of the a big reversal indication, the V signal. This is your V signal, kind of perfect. It's not always going to be this perfect, but this is a really good example. So when this V went back and it broke, because in a downtrend you have to have a high, you have your high right here, you have your low right here, you have your lower high right here, and then you have your lower low. So when this decided to reverse and it took out your last lower high, that trend is now a buyer's market.
Gina, draw.
It's not always just that simple. Sometimes it consolidates, but once your high is taken out, it's no longer a seller's market anymore. And then it makes a new high. You wait for the new low, the new higher low, and then you
draw a horizontal line on that high right there.
What's that?
Draw a horizontal line on that high right there. I just want to see something. Not the high that was broken from when it was before. It was like when it was still.
This one right here.
Yep.
Draw a horizontal line like this.
On the high. Just a horizontal line right there. Yep.
I did. You don't see it?
Oh well, yeah. I was saying like actually put one on the
way across.
Yeah.
Oh, okay. I see what you're saying. All right, I see what you're saying. Boom. That becomes your next support level, baby. That was a good one, Chris. Was that Chris who told me to do that?
Yeah.
All right, so let me just take that back. I'm sure you guys are familiar with support and resistance, but once it broke your last resistance point, it became your new support level for your buy. So we went from a seller's market, which is here. It broke your last, your high right here. So that was your last most recent resistance point. And then it came back down, it broke that, came up, came back down to test that resistance point. And when it came to test it, it technically made that your new support level.
I don't really trade UJ, but what I do know about UJ is it follows structure almost.
It definitely
perfectly.
do. It do. I back tested UJ, and I like it, but I don't trade it either for some reason.
I don't trade it because I don't trade US. I don't trade dollar pairs.
Oh my God, I don't either.
But
I do not trade the US dollar, especially during the COVID-19 situation. That mug, you never know what's gonna happen. And then we got Trump in office, you know. So anywho, any other questions? And of course, my favorite setup is these double bottoms here. But that'll be a different training.
yeah. Well, it's already been an hour, guys. We like to keep these to an hour, though we will stay longer for those that have questions. But we want to be respectful of everyone's time. So if you have something that you got to do, don't feel bad for dropping off. If we don't have any more questions, we can end it here. But if we do, go ahead and let us know.
And you guys can hit me up on Facebook or if you need, or Discord or Zoom, or not Zoom, but if you need any other assistance, just kind of reach out to me and the team, and we're all here for you. So
Speaking of Discord, if you're not on Discord, get with your sponsor and get an invite link from them, right? Everyone that's part of our team that's with Atlas